So, just to kind of start off with, why would you even want an LLC to manage your crypto? Well, there's a couple reasons. If you have more than $50,000-$80,000, you probably want to protect it, right? Like if you got sued personally, and you never know what's going to happen. Your kid could rear end somebody, you could rear end somebody could fall on your property, especially as, things they will appreciate here. You're going to become more of a target for this stuff. And there's a couple other reasons. If you have a long-standing bank account for your business and you are taking large amounts of profit, it's probably not going to get frozen. You're not going to get flagged. You're not going to have issues. If you have, just set up an LLC post price appreciation and you move a large amount of money in there, as long as you're having the conversation with the bank beforehand, probably still going to be okay. If you're moving a large amount of money from a crypto exchange to your personal account and you haven't ever had, 6-7 figures move through your account before, they are going to flag it. They might even debank you, and they will hold that money for weeks until they send you a check. I've had it happen. So just be aware of that, right? Like the business piece, if you have a holding company that manages alternative investments, which is the way we structure it, if you talk to a lot of CPAs or attorneys out there, they're going to tell you to structure a trading company. And that's great if you're an actual trader. Okay, so if you're trading crypto on a pretty regular basis, doing more than 20-25 trades a year, probably makes sense to set up a trading org, right? But if you're a long-term holder and you want to use the assets to generate income or borrow against them, like our clients do at Digital Wealth Partners, then a holding company makes more sense. And here's the difference. A trading company, you're going to not be taxed on every single transaction, which is great, but it's always short-term capital gains. You never get the benefit of long-term capital gains if you structure it as a trading company. If you structure it as a holding company, and again, you're not making that many trades, you're going to get the benefit of long-term capital gains. So if you've invested in this asset class for more than a year, specifically here in the U.S., other jurisdictions have different time frames and amounts of taxes that you're going to owe, but 15 to 20% on the tax rate. And I'm hopeful, just like everybody else, that there's no taxes on crypto, right? Like I will be elated if that takes place, but I got to live in the paradigm and the rules of the road that exist today. So, and you might say, okay, well, if it's just for taxes, I don't need it. Well, like we talked about before when we first started, creditor protection's a big deal. You want to make sure that you have anonymity when you're participating in things. You can still pay yourself out of the LLC. You still control the assets. You could pass through taxation through an LLC. You could file as an S corp. You do have to pay yourself a reasonable salary once it starts producing revenue, and that's somewhere between $50,000 and $70,000 a year. Is what you have to pay W-2 taxes on for self-employment tax. Anything else above that can be paid out as dividends out of the corporation. You need that structured in your operating agreement the right way. Make sure you have provisions on what cadence you're going to be taking money out of the company, how that works if you have other minority owners on the cap table, blah, blah, blah. You should work with an attorney to structure, your operating agreement. The other thing I would say about the operating agreement that we do very different than other people is we have specific considerations and language around digital assets in the operating agreement, the security of it, governance around it, the legal component there in Wyoming. There's legislation that's very beneficial for digital assets. All of that's curated in the language that we have as one of the verticals that you can invest in when it comes to this LLC that manages alternative investments. The other reason we structure it that way, not as a holding company that manages crypto, is when you go to set up a bank account and you say, hey, this is my company to manage my crypto, they're not going to set up your bank account. It's not going to matter where you go. If you say this is a holding company that I use to invest in alternative assets, that could be real estate, it could be private equity, it could be private credit, other things, gold, silver, they'll be like, oh, okay, sure. What's the NAICS code? And you'll tell them, they'll look it up, they'll see that it's a holding company, they're going to be good to go. If you tell them it's a crypto trading company, probably not going to set you up an account. You're going to have to work with a specific bank or an exchange or somebody like that. So, again, we've come to all of these things in our quest for the best outcome, and we've structured this a specific way for that. A lot of people also ask, if I move my assets into the LLC, is there tax implications? And there can be if you set up a partnership. So a lot of people want their spouse on the LLC, which is completely understandable, right? there are 15 states that have a qualified joint venture, or a QJV. And if you're in one of those 15 states, you can use that exemption between you and your spouse to set up a partnership and still move the assets in there with no tax implications. If you're not in one of those states, one of the spouses is going to set up a single member LLC. This is a disregarded entity, and they are going to use the assets as a capital contribution to start the business. The way that we do that is you will write down the wallet, the amount of the asset name, XRP, XLM, Bitcoin, whatever you're putting in there, and the dollar amount that you bought it at. So we used to talk about, the day of the transfer, writing that amount down. We worked with our CPAs, and this again, like, it's an iterative process. We're always improving it. If you can write down the basis, that's the value that you're transferring in. So even if it's at a higher value or a different value than what you originally purchased it at, you're going to write down the basis value in your operating agreement on the capital contributions page. That tends to be like the Schedule 3 in your operating agreement toward the end of it. And that's where you're going to list the wallet again, the asset, the amount of the asset, and your cost basis, or whatever amount of money it was worth when you bought it. So if you do all those things, you structure it the right way, you're going to get creditor protection in Wyoming. A lot of people will say, well, why don't I set up one in Arizona or the state that I reside in? Most people don't know that you can use a registered agent in another state as the address for your LLC to get the benefits of that state, especially if you're not going to be doing business in your own state. Okay, so this is kind of an online distributed ecosystem, crypto, right? Now, if you're buying real estate, you're going to be stuck in whatever state it's in. It's very difficult to, use Alaska law precedent for real estate, which is actually very favorable for a property in Texas. They're going to pull it into that jurisdiction. They're going to be like, it's on our dirt. This is what it is. With crypto, it's not that way. So you can really set things up to your benefit. And if you're here domestic in the U.S., Wyoming is the best jurisdiction when it comes to regulation around crypto. So we structure it there. You're also going to get fantastic creditor protection in Wyoming. You get charging order protection, which was adopted from Nevada, and it's almost second to none. There's really not a whole lot of states where you're going to get that strong of creditor protection. The other thing about Wyoming is there's no state tax. Yes, so this is the other thing, like, people are in New York, or they're in California, or they're in a state that has some cumbersome laws around what you can do with your crypto. If you've moved it into a Wyoming LLC, you're going to get all those freedoms that exist there in that state. When you go to set up, exchange, there's still going to be a look through to the beneficial owner on this stuff. Some exchanges are still going to be kind of wonky. If you live in New York and you have a Wyoming LLC and you give them a New York ID, in that situation, you might get a Palau ID. I've seen a lot of people do that in order to be able to kind of get around that. But the registered agent there in Wyoming is going to provide you anonymity for your address. The other thing that you get in Wyoming that you get in Delaware and South Dakota and Nevada is attorney-client privilege. So the attorney's information, their name, and all of that is going to be on the LLC publicly. So nobody's going to know that you own it. Nobody's going to know your address. If they look it up, they're not going to be able to tell that you're even associated at all with this entity that's been filed in Wyoming. So if you're looking for, anonymity, you're looking for creditor protection, you're looking for best tax rate, and for a while we thought that you were going to need to file reciprocity with, states like California or New York. You don't have to, because you're not doing physical business in those states using that LLC. So you don't have to file the reciprocity, and you're not going to owe the state taxes. I can't tell you that for sure. You're going to have to work with your CPA. This is just, again, we work with CPAs, and this is the feedback I've gotten from them. We've done more than anybody else. We've done over 8,000 LLCs structured specifically this way, and like I said, we've worked through all the kinks, and we have it streamlined, and it's great. But you may want to go direct with your attorney, or you may want to go seek other people out in Wyoming and have some conversations. Do all that. I will say, for the price that we charge, the other benefit to working with us is we're going to provide you a banking memorandum. We're going to give you a certificate of good standing. We're going to keep up the corporate filings there in the state. And we do corporate veil. also. So a lot of people, this is most people actually, they will commingle assets. They will pay for personal things out of their business, and vice versa, pay for business things out of their personal accounts. I'm just as guilty as other people, in my past. We're a lot better about it now. But all that being said, you want to have segregated accounts, right? Like, so you want to set up exchange accounts in the name of the LLC. You can migrate your personal account over there. All of that is great, and then that helps you maintain the corporate veil, because that's what provides you the creditor protection there in Wyoming. If you have a clean corporate veil, the business has business activities and your personal stuff has personal activities, and you're not, going back and forth between the two. You're making sure that you're keeping meeting minutes with the board. Once a month you get right down. I had a board meeting and we talked about this. This is the accounting that we had. Here's my written consent or written action for, any transfers that we did. As long as that's cataloged and kept clean, if somebody were to pursue you, even personally, they're not going to be able to get the assets that are in the LLC. Worst they can do is put a lien against it. The Rockefeller method is something we work with Laughlin to provide some of our clients. It's a little more expensive, but it does involve, having a trust or another LLC that holds a lien against your LLC, so you're still the first creditor if somebody else were to pursue you. It's a little more complicated structure. Most people just start with the LLC, like I said, especially if they have somewhere between $50,000 and $80,000 in crypto that you believe is going to go substantially higher. It's my belief that these assets are going to move exponentially higher in a very short period of time. And you may not have as much time as you think to set these things up after it appreciates. The other thing that I'll say about the LLC is, here domestically in the U.S., you get $13 million per person that you can gift out of your taxable estate over your lifetime. That's the lifetime gift tax threshold. That's continued to go up as President Trump's been in office. I think that it will continue to go up through his term. If somebody else comes in on the other side of that, your guess is as good as mine. Biden was going to chop it down to like $3 million had he won the election. So, if you think that you do want to get this stuff out of your taxable estate and into a trust and let it grow there for multiple generations, and you want it structured the right way, a benefit of having it in the LLC is you can actually gift minority interest later on after the appreciation to people that you care about, and they can come in on the cap table and you can get a 409A valuation done on the corporation. And let's say your assets in the business are worth $50 million. Even though the assets are worth $50 million, the 409A, because you have minority owners on the cap table, might only be $30 million. Well, guess what? Now you could gift that whole amount out of your taxable estate because you used some creative accounting to show that the value is less than what the assets actually are. So again, we work with clients to do all of this.